got it.
Hello, traders, and happy Monday. Time to get back to work. Welcome to your daily stock report brought to you by QualityStocks.net, where performance is tracked daily. I'm Cathy Rankin, and for Monday, February 10th, we're bringing you the latest news from around the markets as well as the top movers to look out for today. So let's get going in our headline news. What was initially shaping up to be just another sluggish day of vacillating around the unchanged mark, like stocks had been doing throughout most of the week, actually became quite a disappointment for the bulls. There were no economic releases on the calendar Friday, and there were no big earnings reports of note. However, with oil prices near $60 a barrel going into another cold weekend and interest rates on the rise following some hawkish Fed speak, the stage was set for the bears to keep their eyes peeled for a catalyst to finally work off some of the sizable gains endured a week earlier that were already coming under scrutiny. Then, just as the afternoon session got underway, sellers hungry to lock in profits found the news they deemed necessary to keep buyers sidelined into the close. Albeit not a tech bellwether, Micron Technology, saying it sees memory chip prices plunging 30 to 40% this quarter, sent a shockwave through a tech sector that was already vulnerable. While Cisco Systems boosting its sales outlook 2 days ago offered some reassurance about tech's growth prospects, especially following lowered guidance of late, Micron dangling another piece of uncertainty merely exacerbated the market's underlying skepticism about the sector's profit potential. Since higher interest rates spark valuation concerns among growth stocks as well, Treasuries consolidating a week's worth of gains took an added toll on a tech sector slated to be one of the biggest profit drivers this year. The 10-year note yield rose to 4.78% after several Fed officials further diminished hopes of a rate cut anytime soon. As one might expect, the increase in borrowing costs also had an adverse impact on the rate-sensitive financial sector. As a reminder, financials are expected to provide about 8% of the anticipated 11% growth in aggregate fourth quarter earnings for the S&P 500. In the end, the two most influential sectors of all, financials and tech, turning in the worst performances of the day was too much for a diminishing group of buyers to actually overcome. In our small cap news today, for the Quality Stocks Daily Show, here's the one to watch this week. Vocalscape Networks Incorporated announced last week that they have released a load balancer for voice over IP systems in response to customer demand. The Vocalscape load balancer began as an open source project which was adopted and approved upon by Vocalscape. It was made compliant with Asterisk, a popular open source PBX, and the algorithm was revised to more evenly distribute calls. Previously, the load balancer would send calls to a primary server, and only when the primary server was overburdened would the calls be sent to additional servers. The new algorithm balances the load by evenly distributing the calls between the servers. As an additional benefit, the load balancer provides failover capabilities. Starting their trading week at 10 cents a share, Vocalscape will be one to watch this week. Universal Express Incorporated announced today that First Call has recommended Universal Express as a strong buy and a target price of $26.50 a share. The company also announced today that its CEO, Richard A. Altemer, provided in-depth information on a range of current topics in an interview by Money TV. The interview included topics such as Universal stock price, Saudi funding, naked short selling, hold your jokes please, oil and gas company acquisitions, outstanding shares, targeted acquisitions, and the upcoming Jackson family memorabilia auction. Universal Express Incorporated is a 23-year-old logistics and transportation conglomerate that provides logistical transportation, packages and luggage delivery, and equipment leasing services to private postal industry and consumers worldwide. Now, Med Spas of America Incorporated announced yesterday that the company has identified approximately 250 med spas in the USA, and they fit its acquisition profile. The company recently completed a reorganization and stock purchase of Virtuoso Med Spas Incorporated, now a wholly owned subsidiary of the company. Virtuoso offers non-invasive cosmetic skin care procedures in a spa setting and supervised by medical practitioners. The company will expand the Virtuoso brand throughout the USA to capitalize on what industry experts are calling the fastest growing segment of the medical industry, and I wonder why. And that's it for the newsmakers. Be sure to join us every market day for the latest commentary on small cap to large cap and everything in between, brought to you by QualityStocks.net. Also, make sure you look for the Quality Stocks daily newsletter available each trading day through QualityStocks.net. I'm Cathy Rankin. Thanks for tuning in. I hope you have a great week, and we'll see you again tomorrow on the Daily Report.
Transmission is coming to you.   We've got it.   We've got it.   We've got it.   We've got it.  'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've got it. 'We've